And we've seen that first wave down. I would have loved to see it be 40%, but it's 34% on the NASDAQ. And we're in what we call kind of the second wave bounce sideways. And some of the stock indices, including even China, bottomed more like in the June of the first crash. Some of them a little later in October, early November. But we've been moving sideways since then. So the question is, do we get the next wave down? The next wave down is curtains for this market. Of course, that is exactly what I expect. That this is a major top, a major crash, and not just a deeper than normal correction. But the markets have to prove that here. And you know the markets, they're going to hold back as long as they can before they show their hand, as I've been saying recently.
The excessive stimulus has inflated asset prices to such heights that a brutal market crash and painful economic depression are inevitable, Harry Dent, an author and American newsletter writer, commented. You can't just print money and grow an economy past its fundamentals, the market historian and newsletter writer said. They just bubbled up financial assets, he continued, referring to the Federal Reserve. Dent accused the Fed of artificially shoring up the U.S. economy since the onset of the financial crisis nearly 15 years ago. He asserted the U.S. government's aid packages during the COVID-19 pandemic only exacerbated the problem. The fact that after the $10 trillion in combined fiscal and monetary stimulus in 2 years after COVID, we are already falling in a recession again, if that doesn't tell you something's wrong, you better wake up, he said. In this video, we would see Harry Dent explain the market crash and what you must do to survive it.
Because the next wave should be the same size as the first one and often higher. And the first downturn, now that we stretch it to more recently, is as much as 6,000 points in the NASDAQ. So that could take us down in the kind of 6,300 or lower area, down 60% or more by early next year. So that's when people are going to know that this is a major correction and this is a crash. And obviously we have the debate, are we in recession or not? Are we going? We're going into recession, okay? And it's going to be the deepest one. I think it's going to end up being a short depression into 2024-25 or so. Now, the bonds, I mean, this has been the strangest time. In the 2007 stock top, the TLT bottomed and started to rally 6 months before that October stock top, and stock started going down. This time, it only looks like it finally bottomed here recently, in late October. But I still see it at least doubling. So it's at 196 is the target on TLT. In Zero is probably 210, 220. So both of these are going to be huge rallies, and the markets also did there what you'd expect. I've been saying we will not see a rally this big in the Treasury bond market in the past decades or in future decades. So it's going to hide this one as well. But hang in there with these positions, and if people want to add, this is a good time to do it. It does finally look like we put in bottoms there. Now, the markets, the stock markets, NASDAQ now is 31% off its top, and my target is down 92%, at the bottom a couple years from now, okay? S&P 500's down a good bit less, 18% with a target of 86%. So the NASDAQ's about a third of the way there, and the S&P will have to start catching up. The Russell 2000's down 25%. The Shanghai in China's down 17%. Nikkei holding up the best in Japan only because it's not done that well for so long and been a laggard because it topped, 30 years ago or something. The DAX has held up well, only down 11%, and that's going to have to catch up. So the other thing we're seeing, China's home prices are finally cracking. Sales have been slowing for a long time, 13 months, but home prices now down about 3% over the last 13 months. And that's really saying something for the biggest real estate bubble that has been so supported by the government and everybody. And the United States home market's starting to crack. You have to remember, stocks are going to lead this crash as they have. Housing is always slow to top and much, much longer to bottom. The last housing correction, which was, 34, 37% by different measurements in the U.S., took 6 years, to bottom. So housing may be slow to start here, but do not be fooled. This is the last chance to sell your home or any real estate, commercial or otherwise, or international vacation, because this is going to be the biggest housing crash of our lifetimes, past or future. So again, it's happening. This has been, the governments have held this off, but the signs are that this crash is underway. But we need to see this next wave. We need to break the new lows one more time and have follow through. And I think that's coming sooner than later. And boy, I'd be selling into any market rallies here, anything you have less. And if you look into short, 12,300-ish is the ideal target on the NASDAQ. But remember, we might get there. So you have to take that into account when you're doing this. So again, this is going to be an exciting time for people who see this coming. I think 2023 is going to go down as the worst year in the stock market of our lifetimes. So get ready to profit from that, and I'll keep you updated.
This is not going to be a recession, he clarified. It's going to be a mini depression that'll take a couple of years to work out. The market will go down harder and faster than it did earlier this year, he says. By the end of 2022, it will be at new lows. By then it will be too late for most. Now you must do what you must. If you enjoyed this video, don't forget to like the video, subscribe, and turn on the notification.